Hi friends, welcome back. So what the heck is going on with Apple stock? That's the subject of today's video, and you can see here in one day it was up like 7.26%. It's like, what the heck? And I actually didn't expect this because we watched through their AI presentation and I honestly wasn't that impressed. The stock actually went down on the day of their WWDC presentation. Apple stock is up in the past year, 12%. And again, you had this big 7% move. Now, in the recent year, you can see that it's been trading kind of in a range, right? So the lows have been roughly the same. You got the highs kind of the same. And is this the breakout, which is, again, due to that one big move that we just saw recently? It's all based on AI hype. And I want to share you kind of my thoughts when I read through this stuff, and I want to get yours also because I love talking about this stuff. It's an interesting one. And full disclosure, I like Apple products. We have a bunch in our house, so I will probably continue to buy Apple products. And so I have nothing against the company, but the thing is, you have to understand is fair valuation of a stock is different than whether or not you like said company. So that's what we're looking at together. If you read the stuff on coming out of Wall Street, so here's an example. It says, as a headline, famous analyst thinks Apple Inc. is better AI investment than Nvidia. Here's why. And so this is sort of what is the talk of the town, I guess. Goldman Sachs Scott Rubner, he thinks that he sees a wall of money, that's the quote, heading towards the market, okay? Rubner pointed towards the whopping 7.3 trillion sitting in money market funds, and he said he believes the floodgates are about to open and investors would funnel that money into stocks. So I guess he thinks this is going to start third quarter 2024. I'm a bit dubious on that. Remember, Wall Street, they make money from managing your money and keeping you hyped. So yeah, I don't see the wall money myself, but that's what Scott Rubner is saying over at Goldman Sachs. Tom Lee, this is what he says. He's also a hyperbull, and if you ever see him on CNBC, he always says things are going to go up. He actually went to my school, but I don't know him personally. And he's a nice guy, but yes, he's a hyperbull. He says here, investors have been hesitant for much of the year, but they should just, quote, stick with what's working. And according to Tom, which actually has been working to be truthful, AI, weight loss, and related themes is what's working these days, and I guess he's supposed to just stick with it. And you also have Gene Munster, and again, we're talking about sort of what Wall Street people are saying around regarding Apple. And he's saying here, recently made waves when he said a post on Twitter that Apple is a better investment than owning I guess than Nvidia. So it just says own Apple. And understand, guys, is that when you talk about, when they use these kind of headlines, what famous investor, just, all these people are, quote, famous, but doesn't necessarily mean they're good investors. They're just good to watch and entertaining on TV. For example, this particular person who they're always quoting because he's entertaining. He wears pink suits. Seriously, he wears pink suits, purple suits, and he has a kind of a funny accent. He just talks funny. It's Dan Ives. And he's like, he always says the same stuff. Recently, WWDC is the most important event for Apple in over a decade, as the pressure to bring generative AI stack of technology for developers and consumers is front and center. And he expects Apple's going to go to 275. So you're hearing all of this bullish talk from Wall Street. And it's fascinating because I actually look at the numbers being put out by the multiple banks and investment company, or eventually I should say investment banks at Wall Street. You can see here, like, the most bullish one would be, actually, I think it's just Dan Ives. He says 275, 33% upside from here. But then you have like something like Barclays saying 20% downside. I guess Goldman, they're saying 14% upside, but Ives, but I never take what he says seriously. But this is what it is. I'm leaving it up on the screen. And the range is going to be, some are saying 164 upwards the 275, right? My personal opinion on this stuff is, when you look at these things, you look at what Wall Street says, just understand they make their money from essentially selling you products, and also too from managing your money. And this is sort of why I like to look at that presentation for myself. The bet is, are consumers going to be excited enough over this, new AI features, essentially ChatGPT like stuff, integrated into Apple and into Siri? I just wasn't impressed with the thing. Now, I'll say that, I personally don't use ChatGPT. I just don't. Some people may use that, and if it excites you that it is essentially more integrated into, be it the phone, be it Siri, or be it into your Macs, right? Then for you that's really cool. And so for me, it's like, yeah, I'll probably use this stuff because we're being forced to, right? And it's the same way. Then I always say the same thing with the stuff like I use grammar checker and spell checker. That's just part of when you do any kind of word processing stuff these days. I use Google, right? I search for things, etc. And ultimately, I guess all this AI stuff will be integrated into our stuff. But would I go out and upgrade just because of it? Me, probably not. And this is the question that the fundamental thesis is. Wall Street's saying yes, everyone's going to go buy iPhones and Macs now because of this. The thing is, guys, it was saying here, Apple Intelligence features, that's what they're calling Apple Intelligence, will be available on iPhone 15 Pro and devices with M1 or newer chips. So I have 3 computers in the household onto my Apple. I think we all have M chips, I'm pretty sure. So we'll be able to use that. But I'm just talking about my, but because I guess why I bring that up, because you remember ultimately when we talk about this stuff, I just want you to think about it in terms of just real world. Say I didn't have, a computer that could run this AI, would I go out and buy it just for AI? Me, probably not. Me personally though, the new M chips are really, really good. I'm serious. The new M chips are fantastic. It's the best computers I've ever had. I've always liked Apple, but I'm just telling you guys, they haven't always been this good. Just since the new, and I don't, how was that, 3 or 4 years ago? This has been the game changer for me. So that, and just talking about pure performance and the machines stay cool, and you don't have to put graphic cards in anymore, like to play games. It's just everything integrates. It's just like the M chips are really, really good. And I think to be fair to the PC side, I think I remember seeing either Microsoft or some of the other companies are going to start integrating similar kind of silicon into theirs as well, to where basically you got these really thin, cool, lightweight laptops, etc. Whether or not you buy it for AI, I'll leave that up to you. But me personally, I have an iPhone 13, and I'll just show you the list here because I had to check. I always forget what number they're on because it's not even an event anymore when Apple introduces a new phone. It's not like this. I don't know the last time I really needed, I really wanted to upgrade. Even the 13. That was my one I had before that. I think I might have had a 10. I just can't remember. It's just like every time a new phone comes out, I'm just not in a big rush to upgrade. And I like Apple, but I don't. There's just there's nothing forcing me to, or not forcing me, or nothing inspiring me to have to get it. And that's the question I pose to you. And this is ultimately, for investing or anything like that. When Wall Street's, oh yes, everyone's gonna go out and buy these things, and I'm not so certain. Do you need to go buy an iPhone 15 Pro to get these features? And moreover, this Pro, it's like $1,000 phone basically. I was just talking to my wife before I make the video. I was like, hey, is that the average person? Does the average person want to pay $1,000, for a phone that you can drop, break, and maybe have to replace in a couple years anyway? And she was saying, for young kids these days, it's like a fashion / status symbol. And then, we also talked about as well, but in developing countries though, $1,000 phones is just out of the question, right? So you're talking about only in developed countries. So it's, and then my counter is you go out and you can buy, for example, I think you get the cheaper iPhone SEs, or get an Android phone, the cheaper ones, but $200, $300 for a phone these days is totally fine. You can get a perfectly acceptable phone for a couple $100, or in some cases free, even if you sign up for whatever plan. So are people going to want to buy $1,000 phone? That's the ultimate question. And then when you terms and talk of stock valuation in terms of Apple, and I'm just showing you guys my thoughts on this stuff. It's currently a PE. This is non-GAAP around 30. Forward PE also around 30. and when you look at these numbers, and if you want to look up GAAP, it's also the same, 30 and 30. But if you look at Apple's PE in the past, so the past 5 years, it's been in the 20s actually. And the way you want to think about this stuff is, okay, how do you justify whatever PE for said company? You want to look at their earnings growth and does it make sense, right? So remember, if you're unfamiliar with these kind of numbers, it's a price of stock compared to a ratio of how much a company earns, and it gives you a PEG ratio, right? A price to growth, right? So you usually want this to be around 1, and when your PEGs are 2s and 3s, it just doesn't quite match up, meaning that the valuation of Apple based on its projected growth, and sort of also too, projections are a bit of a Wall Street as well, or BS as well, I should say. I have to edit that out. These whenever people say, oh well, the forward P is X, but that's just based on whatever projections, and that's why I read you some Wall Street stuff. If you want to look at, say, for example, what the robots say, robots will say Apple stock is currently overvalued by 11.6%, right? And so that's again begs the question. And Apple's and the robots don't read the news, so the robots aren't going to like. They're just looking at numbers. They're not going to be like, oh well, my God, AI. Everyone's going to be buying, said new iPhone 15 Pros. I'm not on board with that stuff, and just sharing my thoughts, and I want to hear yours also. And also too, I know this that they're having meltdown over in China. And when you ever hear about, say, Apple's cutting prices or Tesla's cutting prices or whatever, it just means like, maybe people aren't going to be buying your $1,000 phones. And moreover, I remember the last time we saw a report coming out of China, it showed, I want to say, I have to look it up. It's something like this where like Apple had dropped from first place to say fifth place in the Chinese phone market because some of the domestic Chinese brands are pretty good. So Apple's, they're always going to make products that people want. It's a good company and they have steady profits and they have people locked into their ecosystem. But sort of the risk for Apple is, remember we talked about before, the government is interested in looking at them for whether or not they're taking too much profit / monopoly in their app store. Is their ecosystem also monopoly, like meaning that by integrating phone with your computer using iMessage, is that sort of basically forcing you to get Apple, which is kind of in our situation because if an Android phone integrated better with my messaging and my AirDrops and that kind of stuff, I'd probably switch over maybe because you have more choices and I get my flippy phone. And so we'll see. Those are the ways, and then also too, they don't really have any like exciting products that I'm inspired to buy. I'll just give you guys some into my Apple here. I'll just give you guys some examples. So like the watch thing, I'm just not into it. The goggles, because Apple's got a watch, they got goggles. I'm just not into it. The headset. They have speakers, which I always look at, but I never get it. I just like, I don't really need it. And so, they're always trying to do new stuff. And ultimately what it comes down to for me, I want a computer, I want a phone. I don't even want the Apple TV. So they actually have quite a bit of product lineup. They make most of their monies from phones though. And so that's sort of why it becomes important then, okay, how can they convince all these people to spend $1,000, plus on the phone? And I'm sure their new iPhone, whatever 16s, whenever they're announced, I'm sure they're going to be 1,000 plus, and then they're going to try to push that. Oh, you got to get AI. So that's my thoughts on this stuff. I hope you guys understand my thinking on these things. And I just want to, state like whenever I make these kind of videos, I don't know, whatever reason, the fanboys and fangirls get sad. They say, "Oh, Chris, you're such a downer," blah blah blah, and it's just like, I just look at numbers, and if numbers make you sad, I don't know what to tell you. This is the stock market. But if you want to watch the hypey stuff, and then that's what a lot of TV is, and that's sort of why you bring certain people on TV, because they like get you all excited about, oh my God, it's the greatest thing ever, and that's essentially what an Apple presentation ends up being. But I feel like it all becomes a bit of a facade and fake when essentially the stuff that is the new things coming out isn't that exciting, at least to me. And ultimately it comes down to the numbers, right? Can you inspire people to hand over their cash to get said phone? So that's the question. Anyway, that's my thoughts on Apple stock. I'd like to hear yours, and catch you all in the next video.